Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to talk about distressed assets, sign of the times, or big opportunity from Marijuana Venture Magazine. To help us do that is Katrina Glogowski, angel investor and attorney. Katrina, thanks for being back on the podcast.
Thanks, Josh.
So distressed assets, what is it? Have we been talking about it? What's happening? What's your take?
Simply, Josh, distressed assets are an existing business concern that is struggling either financially or procedurally. There's something going on, hence the term distressed. And it could be a variety of things, mismanagement, lack of funds, regulatory burdens. It could be a variety of things. So there isn't one type of distressed asset. Now, what are you going to do if you have a distressed asset? So you're a cannabis grower and you went in with zeal and enthusiasm only to discover competition, and you cannot really make the billions and billions of dollars that you were expecting when you entered the market. So oftentimes, people in this situation, instead of closing their business and just shutting the doors and throwing their hands up, they try and sell the business. Now, maybe they have equipment, maybe they have a brand, maybe they have some expertise. These individuals usually have some type of assets with value. And that's where an investor, a VC, might come in and take over the business. You see some mergers and acquisitions, some M&A happening, consolidation. And again, Josh, you and I have been saying this for a year. This is just cannabis normalization. This occurs in every industry across time where people just consolidate, get bigger, consolidate, get bigger. And Josh, you and I have repeatedly said, don't reinvent the wheel, especially now where businesses are failing. Just come in, acquire their equipment at a steep discount instead of opening your own shop and starting from fresh. Usually the equipment has residual value, if nothing else. Some of these extractor machines are hundreds of thousands of dollars. And then also, we've talked about these deals failing. Last week or 2 weeks ago, we talked about a merger that involved MedMen that just did not go well for a variety of reasons. But this is truly a time for people that were hesitant to get in the market in the first place to get their foot in at what I would consider a discount. And this would be my recommendation. If you're sitting out there on the couch with $1 million in your pocket and you want to play with cannabis, don't engage in the competitive process of getting a license, starting in a new state, and reinventing the wheel. Acquire somebody else's problem, turn it around, fix it, and then unload it to a multi-state player.
Yeah, or maybe buy the license and wait while you learn from the existing marketplace before you expand into that, new emerging market. And I guess maybe to explain why we're hearing so much about it is some of these companies, or a lot of these companies, both hemp and cannabis, expanded so fast, so rapidly without a lot of oversight that they basically got caught when the CBD price crashed. And when the economy crashed too, there was not a lot of assets available. So with that, they had to then sell a lot of their property, plant, and equipment to other companies. There's publicly traded blank check companies like IIPR. So when you have a real estate investment trust that's willing to buy up a lot of the assets, then you're hearing, MedMen selling some stuff, Forefront, a lot of these publicly traded multi-state operators having to sell a lot of their equipment or assets in order to have some cash flow. So as a last resort, you're hearing about it. So it's not a good sign, but as some of these players work their way out, like Ignite, for example, spending $50 million on marketing, like we all have been making fun of that guy. That guy's been a meme for a long time. But with a lot of these these distressed assets right now, it's simply just because of the economy and not having access to capital, having to sell it. But again, there's opportunities there. So I would look at, like Katrina said, go to Oregon, go to Washington, find an existing market, rather than wishing and hoping that you can get your $7,000 for a pound of flour in New York. It's just not going to happen.
No, it's not. But again, Josh, we've been talking about this for an extended period of time on this podcast. We've been recommending taking over distressed assets, buying an existing business for probably about a year. So this is not news. I personally look at this article as validation of what you and I have been saying for a while.
Mm-hmm. Yeah, mention some opportunities, like trying to get, obviously distressed assets, as well as stock prices are really low. We're seeing billion-dollar write-downs from Aurora and Cannabis still, but I'm not sure if that's the way to go. This isn't investment advice, though.
I would not recommend that you write a check to any company for any reason, cannabis or not, without doing your due diligence. I would like to give one piece of advice to a potential cannabis investor. If you don't know anything about cannabis, if you don't know the difference between THC and CBD, and if you don't understand what market your particular potential investment is going to hit, say pre-rolls, say edibles, and the regulatory burdens facing that market, don't invest. Just don't. Do not be a fair weather fan. Jump on the bandwagon because you're going to make $1 million. You're not. And if you do not understand the industry you are entering in, and if you do not understand the regulatory burdens faced by these businesses, you're just going to be screwed. So don't do it. Don't do it. It's not like the stock market where these companies report to the SEC and have solid financials and reporting requirements, although I hope that comes in the future. It's highly, highly risky. Highly. My second cannabis investment out of 12 didn't even last a year. After I wrote a 6-figure check, it didn't even last a year.
Yeah, if you end up investing without the right team, then you'll end up being that distressed asset somebody buys. So there's a lot of statistics out there, a lot of data, a lot of reports that you can get and aggregate and look at, how to optimize inventory and flavor preferences and all of that. Otherwise, some of these specialty purpose vehicles are going to come out and buy you up. They're a blank check company that are looking for these opportunities. So invest wisely. With that, we're going to roll this one up. I want to thank my guest, Katrina Glogowski, angel investor and attorney. Katrina, thanks for being back on the podcast.
Thanks, Josh.
I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.